Greece, Euro finance chief warns about debt write-off. Greece's new government will find little support among eurozone policymakers for a debt write-off, a senior finance chief has said. Jeroen Dijsselbloem, who heads the Eurozone Finance Ministers Group, said Greece must stick to the rules. Speaking before a Eurogroup meeting on Monday, he said, "There is very little support for a write-off in Europe." It followed anti-austerity party Syriza's election win, which initially sparked big falls on financial markets. The euro earlier fell to an 11-year low against the dollar, while the Athens stock market fell more than 5%. The markets had recovered by mid-morning, with the main share indexes in London, Paris, and Frankfurt also reversing earlier falls on hopes that a compromise over Greece's bailout terms might be found. Syriza wants to renegotiate the Euro 240 bailout and slow austerity cuts. But the party's leader Alexis Tsipras helped calm investors' nerves when he said in a speech that he wanted negotiation, not confrontation, with Greece's international lenders. Continue reading the main story. Euro v US dollar. Last updated at January 26, 2015, 12:56. Asterisk chart shows local time. Euro USD intraday chart. 1 euro buys change percent. 1.1228 plus. Plus 0.00. Plus. Plus 0.21. The new Greek government will be ready to cooperate and negotiate for the first time with our peers a just, mutually beneficial and viable solution, Mr. Tsipras said. The troika of lenders that bailed out Greece, the European Union, European Central Bank, and International Monetary Fund, imposed big budgetary cuts and restructuring in return for the money. But Mr. Tsipras said, the troika for Greece is the thing of the past. However, Mr. Dijsselbloem, the Dutch finance minister and chairman of the Eurogroup, told reporters on arriving in Brussels for a meeting of finance ministers, the most important thing is that if you remain in the Eurozone you stick to the rules we have. That's true for all countries. There has been a lot of easing of the debt already. In the coming years the interest for Greece will be very low. They get a lot of time to pay back loans, so the question is whether more has to be done there, he said. Standoff. The euro briefly fell as low as $1.1088, the lowest level against the dollar in more than 11 years, but in mid-morning trading was 0.4% higher at $1.125. The euro had already been under pressure following last week's announcement of a new stimulus program by the European Central Bank. Yields on Greece's 10-year government bonds rose 19 basis points to 8.95%, but are still below the level before last week's ECB stimulus program was announced. However, yields on 3-year bonds rose much more sharply, up 68 points to 10.89%. The rise reflects investors' concerns about short-term risks of a debt restructuring over the coming months. Currency trader in Tokyo. The euro hit an 11-year low against the dollar during trading in Asia. Greece's current bailout program ends in February, and economists say a short-term deal will be negotiated, although difficult talks lie ahead. Germany has indicated that it is not prepared to renegotiate the bailout terms, raising the prospect that Greece could end up leaving the eurozone. There is a danger of a prolonged standoff with the troika as Syriza attempts to negotiate some form of official debt restructuring while not reneging on its promises to voters to cut taxes, raise government spending and increase the minimum wage, said Jonathan Loynes, chief European economist at Capital Economics. Michael Hewson, chief market analyst at CMC Markets, said, Tsipras's comments don't appear to leave any room for doubt, as he stated that the troika and the bailouts belong to the past. You can be almost certain that these negotiations will be watched carefully by the anti-austerity movements in Spain, Portugal, Italy, and France to see what measures, if any, Greece is able to get out of EU politicians to deal with the problem of Greece's debt, and the terms of the bailout program. The UK Chancellor, George Osborne, urged all sides to act responsibly in any forthcoming negotiations over Greece's bailout terms. He told BBC Radio 4's Today programme that he understood why, With the Greek economy in trouble, voters were looking for other answers. But he warned that Syriza's election promises to spend more on public services and slow the pace of cuts were unlikely to work. If you take at face value all the things that the new Greek government has promised, including big increases in public expenditure, I think that will be very difficult to deliver, he said.